Good to see a lot of people here today, and I know some people are still coming in. So for those of you that haven't ever seen a video that I put on our website, a lot of people still, our clients don't know that I've done videos like this on our website for people to kind of get more information, and a lot of people are starting to come in right now. So, but one of the things we wanted to do is that in the last couple of months or maybe 6 months, we've done quarterly Zoom sessions, and I see some people here that we've done these Zoom sessions with before. And one of the things that we wanted to do today is combine a Zoom session with our quarterly analysis. So when I first started this over a year ago with analysis, I was like, well, I'm going to do it monthly, and then it turned out that, quite frankly, I couldn't spend enough time on it because the data was coming in so quickly in our market that I said, well, it's probably best if we see a little bit more of a 3 month overview on it. So this is a little bit of a combination of our quarterly Zoom session with our clients and other people that want to join. You don't have to be a client of Red Fortress to see this information, as well as the quarterly rental analysis. Okay, so like Paris said, I'm going to give times for people to ask questions. It's probably going to be about 30 minutes, depending on how long your questions are and that. So I'm glad you're here today. The other thing we wanted to do is try and do it on a Saturday, because sometimes we did it after work on a Tuesday, and I wasn't sure if more people would be interested in doing it on a Saturday. And thank you for being here today, especially after Halloween last night. So we're going to go from here. So where we're heading. So what I like to do is I like to break this down into a couple of different areas, because most of the time people are like, hey, let's talk about the national stuff. Let's talk about local, because real estate is local, obviously. So I wanted to do this in a couple of different ways or steps. So the first thing we're going to do is we're going to talk about the U.S. national sales. Okay. And why is it that we talk about sales when, we're a property management company, we do rentals? Well, sales affects a lot of things. First of all, the predominant thing that US sales do when you're getting all this data in from sales is it affects people's emotions. Okay, so if the national sales market is good, then a lot of people are excited, and they think that real estate's going well, even if they might even be in a down market. Okay, the other thing that affects the sales is obviously when people have a situation where they might have to leave for work. The question is, do they sell the property? Do they decide to rent it, or do they just say, no, things are too bad, I'm going to stay in the actual rental? So there's some of that comes into that. And obviously, depending on the U.S. sales, it's a huge part of our economy. So when that happens, if sales are slower, that'll affect things like the interest rates, okay, in our economy, that sort of stuff. And then second of all, we're going to get into U.S. Multifamily rentals. Okay, so what's happening on the apartment industry side at the national level? And when we talk about at the national level and multifamily, while a lot of you are clients of ours, or maybe you have single family homes or duplexes, a lot of what happens to the single family home industry first occurs in the multifamily. So we're going to spend just a little bit of time on the U.S. multifamily rentals and what's going on there. Then we're going to slide right into the single family home, what's happening in the single family home nationally. Then we're going to get into the Southwest Florida numbers. So what's happening in Collier, Lee, and Charlotte counties predominantly. And then finally, we're going to get into things like internet marketing, what's happening with internet marketing, some rental ideas, and more. Now, a lot of things, when people ask me about, Michael, where do I get my data from? How do I choose things? There's a couple of different ideas or principles that I operate on. So when we get more to the local level stuff, it's stuff that I've been working on for over a year. I'm going to show you today application numbers that we're getting for Red Fortress, our actual numbers. I'm going to show you some of the data that I've taken from one source to show trends on an annual basis in our area, that sort of stuff. But when it comes to national, I take from a variety of sources. Literally, I have to choose to eliminate some of the information that I have, because it would just be too long. And sometimes when you're looking at the information, especially at the national level, it can be often confusing, or not exactly in alignment. And so what I do is I go to various sources that I trust, some of whom that I give data to myself. So like Paris said, if you have any questions, please feel free to raise your hand, but we will have breaks where you can raise your hand and type it into the chat. So having said that, first off, we're going to start part one. We're going to start with the home sales. home sales by number. Now, when you look at this, I thought I'd start off with a little bit of color, okay? But when you look at this, green means good and high sales numbers, and the reddish, pinkish stuff means lower. And what I wanted to do is I wanted to show you something I thought was really interesting from Reza Club. I've met the founder a couple of months ago in August at a conference, and really interesting guy. And one of the things I wanted to show you is when we're looking at U.S. home sales, and you can hear all kinds of different things. But one of the things that you see here is what they're talking about. The last time they did this was in August of this year, and they had 376,000 properties that were sold in the United States. And you're like, is that good or bad? Well, one of the things that this article was saying is that this is the slowest or least amount of homes sold in the United States in 15 years. You have to go all the way back up to 2010, which is what I thought was interesting. And then I thought, well, is that just a one-off, right? Like what's actually happening? The previous month, 388,000. Well, you had something comparable in 2024, but then you'd have to go all the way back up to again 2010 for that low of a number. Okay, and then again in June, 391,000 properties were sold in the United States. In 2024, year over year, it was less. But then when you go back from 2024, you don't see anything at all. So like the last quarter, basically, we haven't had a lot of in terms of overall numbers. We're not talking about price yet. It's been slow, like to the point of the last 15 years. Okay. And then when you look at the real estate decline, another chart that I wanted to show you is that in September, this is like last month, in September, you can see here in Southwest Florida, we are dominating in terms of negative, nationally negative year over year kind of like real estate value, right? So we can see a lot of softening here in Florida at different rates, but in Southwest Florida, we have it the worst. You can see, these bigger circles in Miami mean the number of kind of like sales that occurs. And then, of course, as it goes from red to kind of like a light color, that means that, it's more beneficial. Okay, so they're just talking about price declines. You can see, again, Florida, we have a tremendous amount of price decline, especially in Southwest Florida. And just to show you a different type of graph, and I got tired of putting little red arrows here, but they were talking about the 300 largest metropolitan areas in the United States, and the number one year over year decline, this is back in even in July, was Punta Gorda, Cape Coral, Northport. I stopped putting the red arrows. Then right behind it is Naples, almost 8% decline. Tampa, Sebastian, Deltona, Miami. So we pretty much hit a lot of the real estate decline nationally. And again, so when we're talking about this, this graph that I wanted to show you, the bar graph, is in July, comparing to 2024 to 2025. But again, you're seeing that this is July. The last one that I showed you back here was for September. So this is like not just 1 month; it's a quarterly thing, right? So another graph that I thought would be interesting to just give you an idea of what's happening is that they talked about a 1 year shift or year over year, again comparing month to month, not just the previous month, but what happened in October just came out yesterday. The slide is that you'll see that 11% is the number for the housing inventory for sale. So in other words, in October of last year, we had a certain number, and now that's increased by 11% in Florida. And you can see, like in some other parts, when you're hearing like data about what's happening in the United States, you can see like Texas as well. You have Arizona at 23% year over year. So there's a lot of places where there's increased number of sales, right? So remember, there's not as many sales going on, and the actual listings are increasing nationally. And just to put, not to put another point onto it, but when we're talking about the housing inventory, what's it like? And I thought, again, just to show you a little bit of what I do and looking at numbers, this I thought was really fascinating because you have here a 6 year look. So in other words, they're taking a look at how many properties were on the market in October of 2019 versus, say, last month. So 6 years later, what did it look like? And what's fascinating about it, and again, this might explain to you why you hear different things like, oh, the increase in price of properties in the Northeast, is really high. Like, why is it maybe Chicago's doing well compared to Florida? You would think that the exact opposite's occurring. But what this graph or kind of chart is showing is compared to 6 years ago, you can see that in the Northeast, there's not as many properties up for sale. Okay, even in the Midwest, you're seeing all these negative numbers here. And then you see, kind of interestingly enough, you see Florida, we have 23% more properties listed for sale than 6 years ago. That's again before COVID, all this type of hurricane events. Texas 31%, Arizona 37%. So when you see some of these data and they're saying, wow, like why is it that Florida might be down in terms of the value of the real estate? Well, it's because again that we've probably built versus in the Northeast where maybe they didn't build as much. And you're starting to see that 6 years later. And a final kind of look at things. The Florida sales inventory for the month of October. Again, just showing you different data points. You can see that this is over the last 8 years. It kind of like came down, obviously around the time of COVID in October of 2020, and you can see that over time we've been getting higher. The good news is that we kind of did slide a little bit down to 162,000 units for sale. That's in October, so that's good, but it's still kind of elevated and high. All right, so that's first of all a little bit of the sales perspective on a national basis. I thought I'd explain to you guys why sometimes you might hear things are going well in some parts of the country and not so well in other parts of the country. I just wanted to give you a kind of an overview on that. So, do we have questions right now for the first part? Anything, Parrish?
Nothing in the messaging that I can see, so I think we're good to continue.
Okay, great. So let's get on to part two, which is going to deal with multifamily rentals. Okay. And again, one of the things that I got just from a couple of days ago, I thought was interesting is that they were talking about on the multifamily front, okay, nationally. This is from apartments.com. And apartments.com is actually the largest national website for rentals. Now, Zillow has more traffic than apartments.com. There's no doubt about that. But Zillow also does sales. Okay, so apartments.com and CoStar Group, what they do is primarily rentals. They also do sales with homes.com. You've probably seen a lot of their advertising. But they were talking about this is the steepest September decline in more than 15 years for the multifamily. Okay, and one of the things that I thought was interesting is that they were saying that annual rental growth slipped to 0.9% in September. It was down from 1% in August and 1.5% to start the year. So the national side of things on the rental side for multifamily is slowing. And they're saying that basically this year's pullback exceeds typical seasonal patterns. So again, when we talk about, say, our rental properties in Fort Myers, remember that in other parts where you're getting this type of data, maybe people aren't moving as much in September and January, say in Chicago or New York, versus where we have season and maybe we have an uptick in sales and an uptick in people, renting. Okay, so they were saying that this is far beyond the seasonal patterns and it reinforces the broader trend of moderation in rent growth. So what they're saying is that things are slowing, that they're not necessarily pulling back. Okay. Just another thing, real quickly, in the multifamily is multifamily occupancy. So when you're talking about rental rates and so forth, how is it looking at for the multifamily occupancy? So again, this comes from Zelman Associates. It's a national company that does tracking for like all kinds of different ways. But what you see over here in like kind of like in a darker font is what's happened in the last 3 months. And then what it does is it makes an aggregate or average for this third quarter, right, that just ended. So what they were basically showing you is that when you're looking at this graph for national occupancy for multifamily, you can see that first of all over here it's at 0.5%. So don't think that like if it dips, it's massive, right? But at the same time, you can see that for the last quarter, it's been the lowest level of occupancy at 93% occupancy than when they first recorded 14 years ago. Okay, so we have had softening again in the multifamily. We started the year at like just over 93.5% occupancy. Now we are now at 93% occupancy. Okay, and another graph that I thought I would just share for you before we move on to the multifamily is this graph about multifamily concessions. Okay, so I thought this was really fascinating because they're talking about what does it look like when we're starting to see softening of growth. Do they just lower the rent or do they give out concessions? And what they were basically showing is that this 55% they kind of increased it in terms of concessions since last month, but it's not at the highest rate since July. And again, we look at trends. This is still kind of elevated since 2004. You can see how, generally speaking, it started to pick up with the concessions, okay, by apartment communities, and this is year over year. But again, just wanted to show you that they did go up a little bit more, but it's not as high as it used to be a couple of months ago. But again, this is just at the national level. We'll see what happens when it comes to, to October, November, and December, when maybe in some areas they might have to offer a lot more concessions for people to move in versus our area. So again, just wanted to cover that real quickly. Do we have any questions so far, Parrish, or anybody
We
else?
actually do have a
Yeah,
question from Ernie. He's wondering if
yeah.
do you feel we've hit the peak in housing inventory?
Wow, great question. So there's a lot of things that I could say about that, Ernie, um, with regards to construction. So one of the reasons why I do these things is that for me, and I'm doing this as a professional, um, I always get this conflicting views where I'm reading articles and they say, well, we don't have enough homes, right? Like we have a critical housing shortage, and yet you get this data where you're seeing obviously for multifamily that it's softening. So when things start to soften, when they start offering concessions to you, when the occupancy is starting to go down, you would be like, well, that doesn't really make a lot of sense. So to answer your question, I think that it's a little bit of a good question to unwrap. So first of all, um, let's talk about the regular supply and demand. So is there more demand for housing in the United States? And I think that you're going to get a very mixed review on that because since the start of the year, we've had a net migration of negative, meaning that the number of people coming into the United States versus the number of people that have left, typically either voluntarily or involuntarily, uh, for people that don't have the legal authorization to be in our country, that exceeds over 2 million, according to several stats that I've seen. So in other words, if 2 million people have kind of left our country one way or the other because of immigration, obviously that would point that there would be a softening of the real estate market. Like unless you're having 2 million people being born or this huge population explosion, again, this is not even a full year. It would mean that the demand for housing would be down. Now, when you look over on the supply side, it would seem to me that what you're seeing is that first of all, a lot of people are building homes in certain areas, but I have heard that first of all that the large real estate trust funds, the REITs, have started to pull back in terms of investing in real estate. First of all, so the people like those institutional investors that were, like Progress Residential and Blackstone and that, it's not that they've stopped utterly investing, but they've pulled back a lot of their funds. And I've heard that builders as well, especially in, Florida, Texas, and Arizona have pulled back. So to answer your question, depending on the area, but certainly Florida, there has been pulling back in terms of building. We'll get into our local area, but I think that like your question asks, are we at the highest point yet? Or maybe the way to look at it, Ernie, is are we at a situation where are the real estate values going to go down lower because of construction? I would say in our area, definitely. In some parts of the United States, not as much because they weren't building as much, if that makes sense. Is that good? Okay, so it's sorry to give a nuanced answer there, but it does get into a lot of like different information that I haven't put into these slides. So great question, Ernie. Anything else, Parrish, right now before we get a single family home?
We look clear in the chat right
Clear in
now.
the chat. Okay, so great. And then some of this, what I just answered, you'll probably see in some graphs here. So let's talk first of all about single family. We're talking about the national kind of part three, if you like. Single family days on market. So again, for us, I thought this was interesting. What's it look like days on market? How long does it take to rent a property, single family home nationally? And you can see that once again, it's kind of popped up again a little bit higher from a couple of months ago. So we're almost below the 40, or we are below, I should say, the 40 days on market. We're probably around 37 or 38 that went back up. Now, it's not been the highest. We can see like in 2025, we can see that there's certainly for most of the year that the days on market were a little bit higher. Again, we're not talking about huge differences here. Like the worst one was probably in May of 2025, where it was at 41. So we're at 37 or 38, so it's down a bit. But again, if you're looking abroad, like for the last 6 years, obviously we're on the higher end, right? So if you eliminated 2025 and 2024, we would be at the highest in 6 years, right? So it's kind of a mixed bag. I took an article just a week ago from looking at the single family home rentals, and they were talking again that in August, the cost of renting a single family home grew at its slowest pace in more than 15 years, according to this one person totality that does tracking. And again, I tried to expand this so that you guys can see what I was actually saying and reading. And then they said that in August, it increased only 1.4% year over year, a sharp decline from 3%. So it didn't say that right now that nationally necessarily that like the rents have fallen into the negative. We'll get into that in a second, but they were just saying that it's definitely slow, just like the apartment industry, right? And then we'll look at the single family home occupancy. So what are we looking at? We talked about days on market, how long it takes to rent a property. What about occupancy? And this is where it's starting to get, once again, uh, more interesting or more revealing. So again, Zillman Associates, they broke down the last 3 months into this quarter. You're talking about just over 95%. And again, when you're looking nationally, and just a little bit more to your question, Ernie, when you look at this, literally 95%, you have to go back to the fourth quarter of 2013, 12 years ago, for that number to be lower than it is today. So again, what does that mean? So it means that when we're talking about inventory, we're talking about people that want to rent homes. Um, Occupancy wise, we're at nationally the lowest level in 12 years. Now, again, that sounds kind of dire, and in a way it is, but understand that these are, half percentage points off. So it's not like everything's cratered and fallen, that sort of stuff. But it is obviously telling, and you can see it in the next graph here. Just at a local meeting I was at 2 days ago, some of the property managers were coming up to me and saying how difficult it is to rent properties in this market. And you can see here, here's another telling graph, single family home move-in rent. So what happens when somebody leaves your property and we want to put it up for the market? Okay, this is a national stat. What happens with that new move-in rent? So if somebody was renting at $1,500 a month, for instance, does that rent go up after they've moved out or go down? And for the first time ever, nationally, they showed nationally that it decreased, meaning that if you had a rental property at $1,500 a month nationally, you might be lowering it now just about a half a percentage point. So maybe you might be looking at renting it out at 1475. Again, this is a national level. Okay, so again, it's taken the hot areas like San Francisco and so forth, where they haven't been able to build, or the Northeast and so forth, and it's combining with other areas like Arizona, Texas, and Florida, where again there's been a slower rental growth. And then not to feel I don't want to make sure everybody feels good. I don't want everybody to feel bad in that. But when we talk about blended growth, what does that look like? So in other words, if we combine people that were renewing their leases as well as new people moving in, is it still positive? Is it negative? And again, it is still positive. So when we're talking about lease renewals nationally, it still looks like people have a tendency to increase the rent. Okay, so it's more like they're seeing the softening in the market nationally, and we're like, okay, great. Like somebody just moved out. I know there's not a huge pool of people to put into my property, so we're going to be offering at a lower rent. But for people that are, say, still in the property, people are still increasing at about maybe 1 to 2%, as you can see here. Okay, and then another graph here, and I'll end with this nationally, is this talks about the single family new move-in, and they're talking about the rent growth being negative. And you're like, well, didn't we cover that, or what does that mean? So what this graph actually shows is that some people might be in a situation nationally where they're still increasing the rental rate after somebody moves out. So again, using that example, they might be in San Francisco. Somebody rented a one-bedroom, one bath for 1,500 over there, and now they're increasing it to say 1,550 or 1,600. Okay, so that would be a positive type of rent growth. But what about the people that are or going from 1,500 to say 1,475 or 1,450, that would be negative growth. And what I thought I wanted to show you is that half, it just went over 50%, half the people are in that negative new move-in growth situation. And it's obviously the most ever. This dates back 14 years. And you can see it's pretty significant. Okay, so again, when I see data points that I think are interesting, I want to bring it up to you guys. So again, this over 50% would mean that half the people that they polled are now saying that when somebody moves out of the property, I'm going to be offering that property at a negative rental rate. Doesn't mean that it's collapsed. It just means that to get people in, they're aware that the market has softened at a national level. So having said that, part three is done. We're about to get into some local data and we'll see how we're faring locally compared to the national. Anything on your end, Parish, right now?
You're looking clear on the chat.
All right, so
I'm keeping an eye on it.
great. So we're coming into part four. We're going to get into the local data now. And what I always like to do is start off with local trends and what's kind of data saying about our local economy, right? So the first one is from the Florida Gulf Coast University. They do a good job giving some general metrics. And the first thing that I want to point out is that our unemployment here in the area in Southwest Florida is at 4.3%. So it rose 2 percentage points. But if you talk to economists, if you're in the 4% unemployment range, you're doing really strong. Okay, so our local economy right now is strong. Another thing that I thought was really interesting about the data for Southwest Florida, and this is talking about Collier, Lee, and Charlotte County, but they were talking about the single family home building permits fell 11% year over year compared to August. Okay, so what that means is that we're starting to see that the building is starting to slow for the single family home, which is important. Okay, now in the multifamily side, they don't really kind of talk about it as much, but it has not stopped in Southwest Florida. In fact, I'm going to do another Zoom session probably on it, just talking about the sheer amount of units that are coming on in Southwest Florida. I talked about over 6,000 units coming on this year. They're definitely on. They're definitely going to hit that and then some. So the multifamily has not stopped, and one of the reasons why it hasn't stopped yet in our area is because it takes years to build it, get it permitted, the environmental studies versus a single family home. Okay. Single family home sales, they say decreased 1% in August compared to the previous year. Okay, so that's not too bad. That's pretty stable. Single family home prices, they said in August, this is the last time they gave it, it increased by 4% in Collier County while declining 1 to 5% in Charlotte and Lee. So you're saying, well, wait, Michael, I thought that you were talking about that, like the prices were going down in Punta Gorda by 12%, Cape Coral by 10%, right? But this is another way of gauging it, medium, where they take the highest on one end, the lowest, and then they kind of sales price, and then they kind of move them together for the median. That's how they came up with it. So again, it's showing that Charlotte and Lee County are certainly softening, and Collier County, according to this graph in August, hadn't hit that kind of negative growth yet. They're talking about the number of listings though, and this is what I thought was interesting, is up 18%. So the number of active listings in August, Southwest Florida is really high, up almost 20% year over year compared to last August. And then the consumer sentiment index, which I thought was interesting in Florida, it fell by 1.5 points. You say, what does that mean? It just means that a certain number of Floridians are aware that the economy, the real estate economy, and the economy overall is slowing. So now here's a chart that you're going to like, maybe or maybe not. This is comparing, this is our data, what a difference a year makes. So I wanted to take the number of vacant units by city, since I've been doing this for 13 months, from September of 2024 to September of 2025 last month. And I put it by category. And hopefully people can see that. Not to worry, I'm going to get into all kinds of numbers. But for those that like graphs and visual stuff, they don't like numbers quite as much. What you're seeing here is that in Fort Myers, you had a certain amount of properties in 2024 that were up for rent in September, and that number has more than doubled, almost tripled. Okay. In Cape Coral, that number was close to, say, 700 a year ago. It's almost doubled to just under maybe about 1350. We'll get into the numbers here. In Lehigh Acres, you can see that in September of 2024, the number of 3 bedrooms we had on the market for rent was around 350. That is more than doubled. In Port Charlotte, which you'll see the numbers has typically been a little bit more steady. You're seeing that they just had over 200 rental units for 3 bedrooms last year in September. This year, it's approaching kind of like the 350 to 400 level, so they didn't double quite as much. Naples, you can see it's almost doubled again from 700 to 1400. And Bonita Springs, this is actually for September of 2025. So I didn't have a year of data for Bonita Springs. I only have 6 months. So just ignore that for a second. And some people would say, well, Michael, why is it that you're looking at 3 bedrooms? Like maybe I've got a property that's a 2 bedroom condo on that. Again, the reason why we do the 3 bedrooms is because it's the greatest desire for people in terms of who would actually like to have a rental property. So I'm not saying that people don't like efficiencies or 1 or 2 bedroom condos or 1 or 2 bedroom homes, but when you have a 3 bedroom, it appeals to so many groups of people. It can appeal to a single guy or gal. It can appeal to a couple. It can appeal to college roommates. It can appeal to a family of with one child or two or even three. So really, when it comes to the desire of people, one of the ways that I thought we would track it is by what's the biggest data point where people want to get 3 bedroom homes. And if the largest number of people want 3 bedroom homes, if it's increasing in number, that obviously means that the market's softening, right? So when we get into the data, and I'll show you this, this is a little bit, I'm not sure how easy it is going to be um, for people to see this. Those of you that have seen this on the blog, I basically what I do is every month I go to one source to go to a trend. Okay, so in other words, I go to one source to get this information, and I note it religiously. And so we go over here by month. You can see September over here, and then I broke it down just like the last graph. I broke it down into cities. And what I decided was is that I'm going to go by first of all the total number of 3 bedrooms that are up for rent. So here you can see for Fort Myers was 332. And then I thought, well, we're going to break it into subcategories of rent where the 332, some of the properties could be worth $5,000 a month, right? But what happens if I were a consumer and I had, say, $2,000 a month to rent a property? How many could I choose in Fort Myers? And back in September of 2024, it was 43. And then likewise, if I had $1,700 a month or less, if I wanted a 3 bedroom, how many could I choose from? And it was 6. Now these are 3 bedroom homes. I didn't say whether they have a pool. I didn't say if they were 3,000 square feet or more or less. It's just the concept of if I'm a consumer and I want a 3 bedroom home, what would it look like? Okay, and I did it for all the other properties. Again, you can see here in Bonita, I started in May 6 months ago. Now, here's the interesting aspect, and I'm going to get into these as a bar graph, but I just want to kind of give you an idea of why I did this. So, when we're looking at September last month, and yes, I'm going to be doing October shortly, or actually today, we had 817 total homes for rent, 3 bedrooms in or larger, I should say, in Fort Myers. Now, at some point, something is going to happen with this number at 817, and this is what I want you guys to look at. At some point, and we're going to get into how low can we go. At some point, the people that are say at $2,100 a month in rent, at some point they're going to say, I'm one out of these 800 people or 800 properties. I want to lower it and get it rented. So it's naturally going to have to eventually go into the 2,000 less. Either it rents and it comes off the market, it's no longer part of the 817, or over time it's naturally going to reduce its rent until it gets to 2,000. And these 192 3 bedrooms that you can rent for say $2,000 or less, at some point, if it's at 1,900, at some point, if it doesn't rent, it's going to have to get into the 1,700 category. And eventually, the 1,700 category is going to rent at some point. They're going to put it up. They're either going to take it off the market, they're going to rent it probably, or heck, they could even sell it. But this is what you should see, the natural progression of the total number should lessen, and it should go into this number, which should increase, and then it should go into this number, which should increase until such time as you start to get that balance where now a lot of people are renting the $1,700 a month properties or less. they're excited, I'm getting great value, and then all of a sudden you're going to have less of those numbers, and then that's going to lead to people say, oh, okay, I'm maybe going to keep my property at 2000 or 1900 and that sort of stuff. Okay, so I just wanted to give you an example. So what we're going to look at here is here in Fort Myers, we're going to have a graph here that shows quarterly graph. And what this shows, you can see December of 2024, March, June, and September. Okay. And what I did was I took these numbers to show you, instead of like looking at a huge amount of data, I'm going to do this for every single place that you're at. So Cape Coral, Lehigh, Naples, Port Charlotte, we're going to get into each one of these. But basically, it looks at here in December of 2024, we had about 500 units. This is the total number. Okay. It shows here in that lighter red, or sorry, darker red, I should say, how many 2,000 or less properties were on the market of these 500, and then the bright red is the 1700 or less, and you can see it. And over time, you can see just going from the sheer number of properties in Fort Myers, again, a quarterly snapshots, you see that the number of vacant three-bedroom homes are increased. You can see as well that over time, the number of properties 2,000 or less has increased, and you can see looking at this dark red, it went down one quarter, but now it's come back up to September compared to a year ago. So again, you're seeing at Fort Myers that the numbers basically are all going up like I'm showing you, okay? And then if you look, and we'll take questions on this again, let's take a look at Cape Coral. Different color, different place, okay? So we have 1,000 properties, say, back in December of 2024, three-bedroom homes that were on the market, just short of it. You can see again 2,000 or less in December. And then the dark blue represents $1,700 or less. So you can see what's interesting about the Cape Coral one is that it was increasing, and then there was a slight dip in the last quarter for the total number of three bedrooms on the market. Now, I'm not saying that all of a sudden there's no homes for rent, but this is the trend that you want to see. You want to see these numbers starting to go down, because if they do go down, it makes your property easier to rent, and you'll be able to rent it at a higher rent. Okay, you can see as well 2,000 or more properties that is increasing. Okay, so the total number has gone down, but the total number of properties $2,000 or less up for rent has increased. Okay, for the last year, and then you can see just like 1,700, you can see it's definitely increased. So the good news in Cape Coral is that the total number of three bedrooms overall has decreased, but we still see a soft market. You can see it because the people are saying the numbers for 2,000 or more, 2,000 or less and 1,700 or less has increased even over the last 3 months. Okay, Lehigh, same thing. You look at 2,000, total number of properties going up. Okay, so it's like exponential. It's like almost like a linear line compared to Cape Coral again, which it wasn't. You're seeing the same thing for $2,000 a month or less for a three-bedroom. That is also just increased almost like a straight line. And 1,700 a month or less, three bedrooms, you can see that's also increasing in Lehigh. So Lehigh definitely, just like Fort Myers, they have a lot of inventory, and you're seeing a softening of the market. Not only are you seeing the softening of the market with regards to lowering of the rental rates, but you're also seeing the total number of properties on the market has not decreased yet. Getting back a little bit to what you were asking a bit before, Ernie, right? And then Port Charlotte. Now, the interesting thing about Port Charlotte, of all those data numbers, outside of maybe Naples, they were the most consistent over the last year for like kind of number of properties and 2,000 or less, 1,700 or less. So you've seen kind of like Cape Coral, Fort Myers, and Lehigh having a certain thoughts. Well, here's Port Charlotte. Let's see where it was the most stable of any. You can see that it shot up over time. It was kind of steady. December of 2024 to March of 2025, shot up greatly in June of 2025, and now it's kind of slid a little bit in September of last month. Okay, but again, you're still seeing properties 2,000 or less, they're increasing a lot. Okay, and you're also seeing the 1,700 increasing a lot. So what you're still seeing is softening in the market, but kind of like Cape Coral, at least the total number of properties, that's a good start, is starting to come down. That's what you want. So Port Charlotte was interesting that way. Naples, real quickly, Naples is interesting. It's been very flat for the total number of three bedrooms. And again, it's just a different market. But here's what I do want to point out. Most of the time you literally didn't have any properties that are under $2,000 a month for a three-bedroom in Naples. There was one in June, and there was like three or so in September. So even in Naples, you can see a little bit of a crack. You can barely even see it down here, but there is a couple of properties available in Naples that are $2,000 a month or less, a three-bedroom. And finally, getting into this, you're going to look at Bonita Springs. Like I said, I only had 6 months of data, so I did June and September. But again, you're seeing Bonita is not a huge area geographically or in terms of population. But what really is interesting about Bonita is that it's in between Fort Myers and Naples. And so for people that kind of like are more working class, like teachers, nurses, there's a tendency for them to live in Bonita and then work in Naples. So this is a very kind of like interesting area. It's right in a interesting spot geographically, but you can see here it's kind of slid up a little bit, and you're starting to see that 2,000 or less. We now have, I think it was about three or four. I'd have to look back at that number, but you are starting to see, even in Bonita, you're starting to see that the market's starting to have three-bedroom homes for $2,000 or less. So when I thought of this data, I was like, well, somebody asked me, um, what's this like compared to those terrible years back in 2006 and 2010, right? So I was at the same desk, uh, had a different computer. Okay, this one I have now is a little bit faster, newer, but I was literally sitting at the same desk back in 2000, well, 2000 all the way up through 2010. And there is a major difference, and I just wanted to highlight that without getting into all kinds of data points. But this here is a chart, like I said, from 2006 to 2010 versus today. And the massive difference, first of all, is unemployment. Unemployment. So right now, remember I said to you that our local area has 4.3 unemployment today. I went and wanted to show you by month the Fort Myers unemployment rate back in 2010. And I don't know if you can see this too well, but back then the unemployment rate was for the year was pretty much at 12% or higher. So we had triple the unemployment rate in Fort Myers back in 2010. And over to the left here, you can see the red is for the Fort Myers unemployment rate. Okay, so you can see it kind of going up and down. The green is the national. So typically we are below the national when it comes to unemployment because our area is typically growing faster. A lot of our area depends on real estate and construction. Um, but you can see like 2010, the highest level we had was right up here, and we were well past what the national average was, which was like, about like, 10%, maybe a little bit under 10%. So we had about 2 to 3% higher unemployment rate than the national back when, things were going bad. Again, don't want to relive that, but 2008, where we had like the huge bailout for the financial institutions and stuff like that. So again, so when you're looking at it, you're saying like, Mike, I know that you're saying that things are bad in terms of like the data that you're looking at, but we still have people that are employed here in the area. Our unemployment rate is very low, and that's a great thing. So the major reason why we have a slowdown in our market area is because of the overbuilding. It's not because people don't theoretically have money, and it's not because like they're not working. And unemployment is one of the two big things that you need for a good, healthy rental market, because if people aren't working, they won't have money to rent. And that's kind of like more the demand side of things, and also the discretionary income. Discretionary income. So in other words, if the inflation rate is not under control, and let's just say the inflation rate is 5%, like it was a couple of years ago, are the renters' actual wages at 5% or greater, or are they less? And if they're less, that's going to create that downward pressure on the rents to not rise, but more so to stay the same or go lower. Okay. And another graph that I thought I'd show you here, and then we'll get into some questions shortly here, is I thought this was really interesting. So if you have a situation where you don't have the rental market increasing for the most part in rents, um, this is a very interesting question. They were saying, well, geez, are there problems with applications coming in? So this one I thought was interesting. They said last month, they said more than one third of our contacts, meaning I'm one of them, did you know that there's more fraud, the same amount of fraud or less fraud when coming in with applications. And they were saying like about a third of them said that they've had more fraud than say back, pre-COVID. Okay, so what that means is that some people are trying to get more so into rental units in a down market, and they're not kind of being truthful in terms of what they're saying, whether it's their identification, their bank information, that sort of stuff. Now the good news is very soon Red Fortress is going to have a fraud detection system added to it. So it's coming. I'll let you guys know when we implement it. So this is different. What we're talking about here is when somebody says that they're Superman and they're providing information like electronically, that's where I think you're starting to see more fraud. Okay, and that's what they're talking about right now, and that's a system we're going to be implementing. The actual background screening process, we still have a great screening process, second to none, I would say, where we're able to find evictions that happened yesterday in a lot of the United States, not all parts, but a lot of the United States. So if somebody comes from, say Ohio, we can go to the county level with this company and find out these evictions. So it's really, really important. So that part we're not worried about. It's now just this fraudulent where people are saying, "Oh, I'm so and so," and maybe that they're changing the documents that they're giving to property management companies, that sort of stuff. So I thought that was interesting. And then just to go into two real quick graphs here, or data points, I should say, the low end of our market. So I thought, well, we talk about what's happening at the high end. What's happening at the low end? And so how low can we go? How low is a person ready to rent their property? And typically this might be a one or bedroom. And I've done it over, you can see over the last 5 months. And I broke it again, just like everybody else, down to cities. And you can see that, like say in Naples, I said, well, let's see how many properties are available for $1,500 a month or less. So in Naples, it was one. That hasn't changed, very much. Six, about 5 or 6 months ago. Benita Springs only one. Fort Myers, 107. So in other words, if you had $1,500 or $1,400 or less, you have about 100 units that you can rent, one bedroom, two bedroom, whatever the case is. Cape Coral, 106. Lehigh, 66. And Port Charlotte, 37. Now it's interesting because we've seen it kind of level off a bit in Cape Coral. We've seen it kind of level off a bit in Fort Myers. It's still increased in Lehigh and Port Charlotte a little bit. And the reason why this is important is that you're kind of seeing where the market's standing firm. Because when you have property taxes that aren't going down, and they aren't, by the way, we'll talk about that in a second, and insurance rates that typically aren't going down. Like, for instance, I had insurance for one of my rental properties. There's no claim, obviously, in the last 3 years, and it increased 10%. I'm like, so when you have that situation as a landlord, like I am as well, like you guys, there's only so much that you're willing to kind of go down. And we're starting to see that softening in the market. And then another thing before we maybe take some questions, if you like, and I'd open it up. Sorry, I'm getting a lot of information, but the Red Fortress application, so year over year. So what I did was a little while ago, I started tracking how many applications we have. Now, again, so what's Red Fortress doing? Are we seeing a huge increase of applications? Are we seeing a decline in applications? And just a caveat, the applications numbers will obviously be affected by how many properties are on the market. So if we have 50 properties on the market today versus last month when we had 30, you would normally think that we would get more applications when we have 50 properties on the market, right? But also the type of property affects it as well. So if those 50 properties were all 2,000 a month or higher properties, once again, you might not have as much competition there versus properties that might be more in the 1,300 range where you might have more people that are interested in it. So just wanted to share this with you. So last month in September, and again, these are numbers and I'll get into them, but we had 9, which was a little bit lower than the 2 previous years. But then again, in August, we were better than the last 2 years. So when I extrapolated this number, it looks like we're going to be having approximately 10% more applications compared to last year in 2024. And I think that, Parrish, we were talking about that October rate, and you were looking into it yesterday, and what was that number?
32. We had 32 applications in for
Right.
October.
So we had 32 applications, so very similar to what we did 2 years ago, and obviously we had triple or almost triple from last year. So the thing is that again, when we talk about some of these ideas of renting properties and that, we had 32. I know that we rented, Paris, it seemed to me that we rented about 3 or 4 properties in the last like 2 days,
Mhm.
right?
Yep.
Is that am I right on that?
And
Or
we have 3 or 4 more lined up within the next week or so. Yep.
right. So you can still rent properties. We've rented last month in October, September, and August. Again, just from our vantage point, we rented 10 properties or more each month, between 10 and 12. But there's like again, I don't want people to get like too worked up on we only had 9 versus 27 last month. Like we had a third of what we had in August, but now we're like 3 to 4 times as much in October. Okay, because people can come in and fill out applications on August 31st, right? And then or they can fill them out on like the 1st of September. So that would mean like, this number goes up and that goes down. So, but again, I show it that like year over year, we're up in our applications 10%. And that's important to rent properties. And we are renting properties. And we've seen some good uptick. So maybe Paris, we'll talk about some ideas about what we're doing in our marketplace for people that want to rent their properties. Let's talk about if you're a landlord or a client of ours, some ideas to rent properties, okay? Because um, you know, I don't want to get into a huge Zoom session on this, and we also did a Zoom session on this a little bit a while ago, how to rent in a down market. But first of all, as a landlord, and I am right, and I have actually 2 rental properties, one that just came available, I think it was on Friday, right? In Fort Myers. And so you have to understand your market. So like I was just sharing with you, when a property manager or I say, it's a down market, what does that mean? So you've seen the data. So you have to understand the number of rentals, what your rental looks like, what its rent is like, and whether there's specials that are happening in the area. Okay. Um, and we'll talk a bit more about specials in the next slide. Um, Generally speaking, you want your properties to show well, okay? And that gets a little bit like into a tough situation because if you're not making as much rent, how are you supposed to make your property look well and like look good for people to rent? And the entire thing is about value, right? So when we were talking about how in October we had 32 applications in that, some of our owners have lowered the rent. Some of our owners have maybe put a lot of money into their rental property to get it rented. Like we had one, I know somebody on the Zoom call where they put a substantial amount of money into the rental property and they rented it within a week, right? Because it looked fantastic. So for it's a question of how does your property look? Because if it doesn't look good, then it's not going to show as much value. Okay, and then you definitely have to discount the price, right? Again, the marketing of the rental properties have to be comprehensive, and I'm going to show you a little bit of what I mean by that. I really like to do another session that dives into it, but what I mean by being comprehensive is that it should be standard and good across all kinds of platforms. So when Red Fortress is marketing a property, we don't go to one website and say, here's 17 photos. Okay, we syndicate it out like the multiple listing service, except we're different from the multiple listing service. And we syndicate it out, and all of our properties should have the same type of standard information, the same number of photos, the same kind of job or property description and stuff like that. That's what I mean by it should be comprehensive. It should be going out as much as you can to rent this property in a down market. And for instance, just this past week, we were beginning management from another property management company, and like they didn't have comprehensive from one platform to the other. I looked at one site and they had like 8 photos. I went to another site, they had 2. And I'm like, oh, okay, that's interesting. So if I went to that website with 2 photos, I wouldn't want to rent that property because there was only 2 photos, right? Um, so one of the things that we're going to talk about is how Red Fortress, you guys are getting the benefit of this, but we actually increased our online advertising and we increased it at a higher level. So we're going to get into that and what that kind of looks like and how it helps you guys as clients, okay? And then also we talk about moving incentives and so forth. So we're seeing a lot of that. And again, I don't want to get into a huge discussion about like I sometimes can, but we're seeing like for the multifamily industry, we've seen like 2 months free and like free application fees. We've seen all kinds of things even on the single family home side where half a month, full month free lease, that sort of stuff. So sometimes those move-in incentives can be fantastic if somebody doesn't have the money right now, but they want to move. Maybe offering that month move-in special is great because it requires less money at move-in. Like for instance, we have some people that say, well, Michael, like I hear that realtors charge like something like first month, last month, and a security deposit. Well, that's fine. I would say to you not to do that for a couple of reasons. One, legally, it makes it cumbersome for you to disperse that last month's rent because maybe somebody says they're moving out and they change their mind, right? But also, what does it look like for somebody to move into one of your rental properties? So if your for instance property was renting for $2,000, are you asking somebody to move in that has over $6,000 to move in? So that's why sometimes a move-in special can help them. Okay. And one of the other things that I would say as well is that be aggressive. If your property is not renting, what we say to the people is that don't wait for the market to change. So, kind of like getting back to Ernie's question on that, um, like people ask me, well, Michael, what do you think is going to happen in the market in the next 6 months or years? Should I do like a lower number of months with the expectation that maybe I'll bite the bullet right now, lower the rent, and then say in 6 months or 8 months, the rents are going to go up? Absolutely not. Sort of some cataclysmic event, which I don't want to have happen. Uh, um, there's no way that we're going to be able to absorb the number of rental properties on the market. You've seen all the data in 6 months. I mean, unless all of a sudden there's an extra 1,000 people that move into Southwest Florida that all of a sudden rent single-family homes compared to what's being built, this kind of depression of the rent, the lowering of the rent or the rent staying the same, it's going to be staying around for a little while. Okay. And again, Paris will just spend the time right now to take a couple of questions before we get into our final segment. Appreciate you guys staying on. Hopefully, you guys are finding this interesting. Maybe not necessarily positive, but I believe that when you're talking about rental properties, people need to have the right data. And I look forward to the day when we have less properties on the market, whether it's in Cape Coral or Lehigh or Fort Myers, and I'm hoping that that's going to come soon. So, any questions right now, Parrish? We're good. We'll get into the last
Still
section.
looking clear. Still looking clear.
Looking clear. All right. So, the final section, we're going to talk about internet advertising and kind of
Oh,
like what.
actually, Michael,
Yes.
we do have one. I
Okay.
scrolled down. Is it for the stat? This is Ernie's question. For the
Yeah.
stats, is it safe to add Punta Gorda to the Cape Coral numbers, short-term and long-term outlook?
Yeah, great question. So Ernie, the Punta Gorda is like right, it's sandwiched kind of like between Port Charlotte and Cape Coral, and you're right. I would consider it more like a Cape Coral type of situation, in the sense of how many properties there are available. But what's interesting is that it is much smaller. So it would be interesting to see kind of like almost like a Bonita Springs subgroup. What does Punta Gorda kind of look like in terms of number of properties? And the thing is that you have Punta Gorda here, and like North Fort Myers kind of blends into Punta Gorda from the south, and then you have obviously Cape Coral coming the other way. So there are lots of people like we have properties obviously in Punta Gorda, and we have a lot of like Cape Coral police that might rent in that area, that sort of stuff that they're kind of like in a smaller area in that. So I would probably say for the numbers that I would probably say maybe overall look at the Port Charlotte numbers more so than Cape Coral just because of the size. If that makes sense, okay? So in other words, Port Charlotte, it's in the same county. It's a little bit north of Punta Gorda. It's obviously a larger population. So I think that Punta Gorda is a little bit more towards the stability of Port Charlotte versus the instability and the lowering in Cape Coral. Does that make sense? Makes sense? Good? Okay. Awesome. All right. So let's talk about the final part, like I was saying about internet advertising. And I'll share some interesting things if you've been reading about it, about Zillow in the news. So there's a teaser. All right, real quickly. So what most people don't understand is that when a property manager syndicates out to things, and I want to get into this a lot more, but just want to give you, scratch the surface, as they say. But most of the MLS has base marketing only. What I mean by that is when they go to Zillow, Truly, and Hotpads, or they go to apartments.com or Redfin and so forth, when you put it on the multiple listing service, it's going to be the base level, okay? And we have agreements with right now with apartments.com. We started over a month ago where we said Red Force is going to spend more money on advertising. You guys don't have to do anything for it. We're just going to do it. We're going to try it out over the next year because we want to rent your properties. Okay. So there's no cost to our clients. And what we did was we were no longer the base level for, say, apartments.com, which again is the single largest rental website. Again, Zillow has more traffic, but Zillow again deals with a lot of sales, and that's why they get more traffic. Okay. So what happens is that when you look at this, and if I could show you this, I took a property here that we manage, and this is what it looks like in a base situation or multiple listing. And then what happens was with the superior market that we're doing now, you're going to see that all of a sudden it changes. It has like an email next to it, that sort of thing. So again, you look before, it's kind of like just like the other ones, and then it moves up where they can email us directly. But that's not even the big thing. What happens is when you look at the old listing, okay, um, when you look at the old listing, okay, for instance, this is what it looked like. And this is what I was talking about a bit with a previous video. So kind of says it's 3-2 and so forth, and it shows about a deposit and that, and it has similar rentals nearby. That's always great when we're trying to rent your property and they're showing all kinds of other properties in the area that might be like lower in rent, right? And then also, this is what I was looking at too, is that it had a like a phone number which was tracking. Most people have that. Send a message, and this is what like you kind of got with again properties off to the side. Now, remember what I was saying to you about fraud with applications. Don't forget that there's also fraud when it comes to online people, like Facebook Marketplace, Craigslist, all kinds of people where they're saying, "Hey, send me $500, I'll move you in." They take the renter's $500 and all of a sudden, they're out $500 and they can't rent a property. So in a previous video, I was talking about this sort of thing. And the new one that we do now, you'll see is much different. You'll see that there's no referral properties off to the side. You'll see that it has send message. It has our source. You can even go to our website. So we have seen an uptick in our marketing in the last like 5 or 6 weeks. With people coming to our website and engaging more, because in part I think that they're trusting the listing a lot more, as well as not having like other like pool homes in the area or something like that. So I mean, if you're trying to rent your property, say for $2,500 a month, you definitely don't want your property to be showing other 3 bedrooms around that's for 2,200 or something like that, because again, they might think apples to apples, which it isn't necessarily, and then they might click on that $2,200 rental property. Remember, like Zillow, Trulia, Hot Pads, Apartments.com, Redfin, Homes.com, and so forth. They want traffic, so they want people to keep clicking through all these available rentals in the area. They don't want it to just go to yours and we rent it. They want more traffic. But I just wanted to show you a little bit of what we're doing here. And then real quickly, Zillow. So Zillow is like I said, the largest traffic website, real estate website, basically in the world. Okay, they're not having a good time right now. So just if you've been following this, I thought I would put this in for internet advertisers. So when people say, "Mike, what do you guys do on Zillow?" We do work with Zillow, but you have to see what's going on with Zillow. So in June of this year, Compass, which is a large real estate brokerage, filed an antitrust lawsuit against Zillow because Zillow and Redfin, we'll get to that in a second, they said basically, hey, when you come to sell your property, or if you come to rent your property and you're doing it, say, with the Compass Group real estate site, when you're doing that, we want you to not do that. We want you to only go to Zillow. And Compass said this is absurd. If we have an interior network, we shouldn't have to do that. And Zillow said, well, wait a second, no, we have every right to say that if you're going to advertise elsewhere, fine. You're just not going to advertise with us. You either start with us or don't come to us if your other work doesn't work out, right? Your marketing. So that was the first thing that happened. Then a month later, CoStar sued Zillow. Now, CoStar is apartments.com, homes.com, and a whole bunch of other, they do like commercial and that, so they're definitely in the real estate game. Homes.com is more so like an aggregate like Zillow with the sales and rentals, okay? And what was interesting about this is that CoStar, or think of it apartments.com, sued Zillow because Zillow took all kinds of photos from the apartments.com website and homes.com website and moved it over to theirs. So they're seeking more than $1 billion in damages. We'll see how that happens and works out. Then in September, Last month, there was a class action lawsuit filed against Zillow and basically talking about its agency with regards to uh, the real estate agents. So what Zillow was doing purportedly, okay, was that it was making better deals with some agents than others. Okay, so there's some type of class action lawsuit that just started last month, and then another thing, and it's going to keep the Zillow's team working around the clock, is September 30th. The FTC, Federal Trade Commission, filed a suit alleging that Zillow's $100 million agreement with Redfin was designed to suppress competition in rental advertising. So what happened was, um, Zillow gave Redfin $100 million, if I recall, for like 5 to 10 year period. It wasn't just for 1 year. And they said, "Hey, Redfin, I know that you guys are advertising in our space as well. What we want you to do is we want you for any listings for rent that are multifamily, like 5 units or more. When you go to Redfin, instead you're going to end up on Zillow." Okay, and this was not necessarily disclosed. Okay, and I put 5+ units in a way because if all of a sudden people go into Redfin and they end up on Zillow, then that's also going to naturally suppress Redfin. So Redfin is basically saying, I'm just going to give most of our leads to Zillow. And their traffic's obviously going to decline. So just thought I'd share that when you're talking about internet advertising, a lot of people don't realize this, what's happening with Zillow. So we'll see how this all plays out. Okay, so just a couple of more slides and we're done. Let's talk about some local area market activities that I've looked at for property management. So again, we've seen some people do a reduction or not charge for application fees. Again, I've seen this activity. I kind of don't like that as much for a couple of different reasons. One, you're talking to some extent about how it's applied evenly to people because you can get into a fair housing situation, as well as normally you would like to have some people have skin in the game. So in other words, if you say, hey, apply for my property and it doesn't cost you anything, you can have, 15 people just apply because there's no effort on their part, especially if they fill it out online. Okay, but that's one area where if you were looking at renting your property, you might want to consider doing something with application fees. Another thing that I would say to everybody on this call is if you have the possibility of keeping your renters, please do so. Um, Especially if they're good, because like we're showing, even if you were to have somebody that was renting your property for $2,000 a month and they move out, again, while we're doing a lot more pre-leasing and we've done another couple this month, meaning that before somebody's moved out, we've put it on the rental market and we've had an applicant that's been approved prior to the first one moving out. But we've hit that about, I think it's up to 13 or 14 times now this year. But even then, it's very difficult in a tough market for you. Even if you keep the market rent the same, it's hard to rent that property right away. And so you have to factor that into lost rent, right? Another thing that people have talked about in the local market and with us, and again, I just, pass this on as information, how we see it is, what's the difference, between a first month free versus 2 months free over 14 months and stuff like that. So there's two different thoughts, and you can go into all kinds of different mathematical equations like, oh, I'm going to give you 1 month free and spread over 12 months, or 2 months spread over 14 months, and that type of thing tends to typically confuse people. So I would say to you that if you really wanted to, if you're in a higher price rental market or even a lower price, if you think that the main barrier for people right now to rent your property at the listed rate is that they don't have enough money to move in, then a first month free rent is great because it eliminates that barrier. The person moves in and they know that starting from next month, a week or 2 or 3 weeks, they're going to be paying the rent. When you get into certain situations like, oh, I'm going to give you 2 months off to move in, now you're setting up a behavior where the renters might be spending their money and they might be blowing it and not putting aside the rental money when it comes for the third month, right? And I just heard of a situation where somebody had we're going to be starting managing their property next month in December 1, taking over for another management company, and the old management company moved somebody in, and within the first month they filed an eviction. And that's the type of stuff that, like, for me as a landlord, that's terrible. Like, I would be not happy at all. And by the way, we have a leasing guarantee if something like that were to happen. I don't think we've even had that. I don't even remember the last time that that's happened. If it's I don't even think we've had something like that happen in over 10 years. But if it were to happen, we do have a leasing guarantee that we would re-rent the property for free. So just another thing that you can look at doing is lowering a security deposit. I'm starting to see that a lot with property management companies, where the property's renting for $1,500 a month and your security deposit's like $800. Now this is typically a little bit more of a multifamily situation. You could do that, but again, for me, um, I don't know if I would necessarily encourage you to do that, because you might want to consider lowering the rent at move-in versus lowering the security deposit. Because if they're for 2 or 3 years and then they move out, you're going to be like, oh my gosh, why did I do that 2 or 3 years ago? Now, some of you might say, well, could you increase the security deposit over time? So, like, say for instance, they move in and they only pay like half a month's security deposit, and then like their first renewal comes up, and then maybe you say, well, let's increase the security deposit by $300 or $400. You can, but here's the big problem with it. If they choose not to do it, if you say, I want you to pay an extra $300 security, they don't have to. There's no legal way that we can enforce it, because security deposit occurs at move-in for lost damages. So the only thing you can do in that case is to say, I want to increase your security deposit by $300. The only thing you can do in that case is non-renew the people. Okay. So, and then otherwise pay the $300 or I'm non-renewing you. You cannot renew the people and give them a legal notice to say, pay your security deposit off. You cannot give a legal notice for security deposits. Okay. So just again, some thoughts on security deposit, charging rentals for lease renewal. So eventually I'm going to tell you a bit more of what happens in our industry, but something that happened with a client that we just again started managing their properties for. We were looking through the lease because they're currently on lease from another management company. What's amazing is that the management company was charging the renters $150 to renew a lease. So what I mean by that is we're in a down market. You're say the landlord or our client, and you have say $2,000 a month rental property as an example. There's a tendency for that price to go down, and the property management company is saying that we're going to charge you, Mr. Renter, $150 in addition to whatever rental price that you're trying to do. So again, I put this out. By the way, Red Fortress doesn't charge for lease renewal to the tenants, so there's no barrier for somebody to renew their lease with us. We want the tenants to renew a lease, especially when it's in a down market, right? But if it's in a higher end market, well, that's one thing too. But we don't want to ever create barriers for renters to renew leases. I just wanted to point that out. That was an interesting observation. And just a final quote or talk about property taxes in 2025. So today is the 1st of November. Congratulations, you made it this far into the year. And now we're getting our property tax notifications for 2025. And what you're going to probably find, no matter what your price property is at, what I found over time is that, first of all, the actual assessed value of your properties might have declined a bit. The way that they do it is they do it from January 1 to December 31 of 2025. And so as the properties start to slide as the year goes on, what happens is they're still remembering what happened for that big sale on January 1st. So when you're entering into a market like this, just like we did in 07, 08, 09, 010, the property tax does not soften immediately. Maybe next November it might, but they also have a tendency to increase the millage rates. So if you're expecting that in this down market, your property taxes are going to kind of go down, it probably won't happen till at least next November. And also the insurance rates, like I said, there's apparently more insurance companies in Florida. That typically tends to happen when we don't have hurricanes. They come back into the state. But like I said, personally, I just got something last week where my interest rates was going up by 10%, about $200 a year. So, say $20 a month in increased insurance rates, even though I haven't filed a claim in the last, say 3 years or something like that. So that's unfortunately what's happening. So that's contributing to people not getting a break on that, and it's makes it harder for us to lower your rent, right? And so basically, that is the end. So any final questions? And as
Yeah.
always, if you want, you can always reach out to me. But Parrish, go ahead. Any questions?
Yeah, Patty had a question
Sure.
about which website did you recommend is better than Zillow for rental?
The best one besides Zillow is apartments.com. Plain and simple. They have a huge amount of traffic that goes in. So Zillow again, has by far the most traffic compared to apartments.com. But keep in mind that a lot of people that are going there are for sales. Okay. So if you're trying to rent a property, apartments.com for sure would be the one to go. I'm not saying that you can't rent it in something else like I don't know, trying to think of some other ones because Zillow, Hot Pads, and Trulia are all one group, just like apartments and homes.com are. But Redfin and that, and I'm getting a little bit of feedback there from Tom. But in other words, maybe what can happen is that you can go to different websites. Each one's charged differently. But if you're talking overall, it's apartments.com for sure for rentals. Great question.
Everyone is now unmuted, so if you'd like
Okay,
to ask Michael any questions, go for it.
there you go. Yeah, as always, you guys can email me while I wait. Any topic you want me to dive into in that, I kind of gave you a couple here. Questions, and even if you want, for some people, if you want to see some of the slides that I gave, I have no problem giving it out to our clients or the general public. That's why people have, kind of gone out of the way to interview me. And like I said, we'll be doing a lot more in the future. So, any final comments? Thank you for sticking with us this Saturday morning. I thought some people might like doing it Saturday morning versus after work, at 5:30 or something. Let me know about that too. The next one, like I said, I might be doing is advertising online because a lot of people, like I just gave today, don't understand how it works. And I know Parrish and I were kind of surprised at some of the information we found out of, and I'm glad I shared just a little bit of it with you today and how we do marketing. So, any final questions before we head out for the day?
Thank you.
Oh, my pleasure. My pleasure. Thank you for being here. Any final?
Hi, Michael. This is Ernie.
Yes, Ernie, welcome.
Great, a wealth of information, and thank you for putting this together. So I'm assuming the next one would be in 3 months?
Yes, so great question, Ernie. So I try to do blogs more than every quarter. The next rental analysis will be kind of like in the beginning of January for like October, November, December. And the reason why is because, quite frankly, like I've probably looked at I don't know, I'll just be conservative, like 100 different articles for this, and I literally had to say I'm not going to include that slide. I just wanted to kind of go and say, well, what do I think might be interesting? But I am going to do some other blog videos where, like, it's not obviously as long as an hour, but I might spend like 5 to 10 minutes talking about internet advertising. So I might do something like that. So if you go to our website, and then right when you go to our main website, you have like kind of like information for clients, and then rentals, and then right to that, it's a blog. Just click there and it'll show what I'm doing, and any type of blog video. So I will hopefully be doing another one this month. And if there's something you want me to talk about, Ernie, send me off an email. I want to do topics that are relevant to people, and if chances are, if it's relevant to you, Ernie, and welcome to Red Fortress too, by the way.
Thank you.
My pleasure, my pleasure. But if there's something relevant to you, chances are it's relevant to a lot of other clients.
Thank you so much.
My pleasure, my pleasure. Great. Anything else?
I don't see anything else in chat.
Anything else? All right, guys. Well, like I said, we'll be doing this again. The next kind of rental analysis will be in probably about 2 to 3 months, but I'll be doing other topics and blog videos. And again, I just want to share with all of our clients and in the general public kind of a little bit more of what our industry does. And if there's any topic you want me to look at, I'd be happy to do it. So that's fantastic. So, ladies and gentlemen, I hope you have a great rest of the weekend. It's a beautiful time in Florida. I don't know how it is everywhere else, but I look forward to you next time, and we'll talk then, or like I said, email us. Thanks so much again. Appreciate you guys being
Thank you,
here.
Michael. Thank you, Parrish.
No problem.
Thank you, guys.
Thanks for coming.
All right.
Take care,
Bye-bye.
guys. Thank you. Bye-bye.